Welcome to this month's Economic Update. I'm Sinead Rafferty, Portfolio Specialist at NAB Asset Management, and I'm joined by our economist, Bob Cunneen. Welcome, Bob.
Thanks, Sinead.
What we've seen over the last couple of weeks is that European and Japanese markets have outperformed the US. What are the reasons behind that?
Well, Wall Street has been under pressure because of the higher interest rate story. And what's noticeable by comparison is that Europe and Japan, very stable interest rates, but also they've had the benefit of a lower currency against the American dollar. So that's helped Europe and Japan outperform.
And how's the Australian market performed?
Well, for April itself, it had a strong performance. It returned about 3.9%. Now, that comes after a weak March. And what we saw, the standouts in terms of energy sector, so plus 10% return for energy shares, and that's largely on the back of higher oil prices. Healthcare was up about 7% for the month, but against that we had a weak performance from financial sector shares. The Royal Commission investigation into misconduct is weighing on bank shares at the moment.
And how has the Australian dollar fared?
Well, the Australian dollar has been weaker against this American dollar strength. So what we're seeing because of this higher interest rate story, we're seeing capital flows towards America and less so for Australia. And in that environment, the Australian dollar typically weakens. We've also seen, in terms of the iron ore story, a little bit of softness there. So there is concern that the Chinese steel production is slowing down, hence less demand for Australian iron ore.
And we've seen oil prices rise over the last couple of weeks. Is there a key reason behind that?
Well, what's a key concern at the moment is that America is pulling out of the nuclear accord. There was a joint agreement between Europe, China, Russia to try and stop Iran getting nuclear weapons. And what we're seeing is America, under President Trump, has decided to withdraw from that accord. So the concern is that Iran, which is a major oil producer, it produces about 2.7 million barrels per day in terms of oil exports. If that's a concern in terms of sanctions by America, then the oil market may have a shortage of supply, hence rising prices.
And are there any other risks that investors should be concerned about in the next couple of months?
Well, in particular, American interest rate risks, because they have inflation concerns with such a low unemployment story at the moment. We also have to be conscious that President Trump has announced tariffs on steel, aluminium, as well as some selective Chinese imports. So it's a concern for the global growth story if America starts to penalise exports from the rest of the world.
And what has been the market impact, if any, of the recent budget announcements?
Well, the budget has been taken in its stride because in terms of Australia's budget deficit, we're going to see a profile where the budget moves into surplus 1 year earlier, 2019-2020. So that's helpful from a bond yield point of view in terms of less supply of government bonds into the financial market. But in terms of the tax cuts, they're very modest in terms of income taxes, and they're staggered over a 7-year time frame. So from that point of view, it doesn't say that there's going to be any dramatic stimulus in the Australian economy. So from the growth point of view, the Australian economy seems to be muddling along.
Thanks for your time, Bob. And thank you for joining us. If you'd like some further information, it's available on the website where you launched this video.